Well, good Monday morning to you. I'm Marlon Bowling with you, your tour guide to the ag commodities. So glad you could join us. Gosh, we love talking with you about our ag commodity trade and tracking its progress for you. Well, first off, today on a Monday, we did have some news from USDA just a couple of moments ago that we had some business over the weekend. I want to take a look at what we had for the flash sales this morning, and it involved corn and soybeans this morning. That's a little bit different. So we had a fairly sizable sale of corn to Mexico. Look at that, 289,575 tons that was sold over the weekend. So that was a pretty good chunk. And soybeans, we sold 126,000 tons of soybeans to China. So 2 boatloads there, and basically about the equivalent of 4 shiploads to Mexico. Of course, they take it usually by rail or whatever. So anyway, big sales over the weekend. Now let's review, shall we, where we closed up on Friday on the ag commodity markets on the futures. So we'll review the corn board. It was basically unchanged overnight, just didn't do anything at all this weekend. On the Globex trade, we had it at 477.25 this morning, and March was unchanged and May was unchanged. How's that for a flat trade? Well, overnight on the soybeans, we ended up higher by quite a bit. We had January 13.5 higher at 1365.25. They've had quite a run here the last 2 or 3 trading sessions. I'm really curious to see what happens now this morning with that export sales news that came out just a couple of moments ago. Now, on the wheat, we had Chicago December down 4.5 at 568. All right, so that was about, a penny and a half, I guess, off of its low of the night. We had December KC wheat down 6.25 at 637.25. Nothing like throwing a drowning commodity an anchor, you know. Life in the spring wheat trade in Minneapolis has December down 4 at 717, so just a penny from its low of the overnight trade. What's going on in cotton this morning? Well, I'm glad you asked. We have December now 62 points lower at 79 cents even right now. On the outside markets, what is crude oil doing? Well, in West Texas Intermediate crude, row, here we go, December up $1.34 this morning at 81.85 per barrel. What does that mean? U.S. dollar index values this morning, pretty flat, but we're all the way down to 104.850 after a big collapse the last few trading sessions there. So that is looking totally different than it did early last week. December Dow futures up 31 points this morning at 34,168. Let's call on Brian Hoops of Midwest Market Solutions and try and decipher what all this means here this morning. So Brian, had a pretty strong move in the soybeans overnight. And now, do you think they'll follow through today or not? Or did the market run up the last 2 or 3 trading sessions with the knowledge these sales were already in the works?
Hey, good morning, Marlon. Hope you had a good weekend. Yeah, we're looking at some higher prices here for soybeans. This is the highest they've traded since mid-September. We had a pretty good run, as you mentioned, Friday and again in the overnight. Now, part of the reason that we're pushing here is because of a strong export business, and part of the reason we're having this export business is because of dry weather in South America. So Brazil, northern Brazil, is the area that's really keenly watched right now. They have had some rains this week. That was expected, but the forecast in the longer term remains hot and dry, and it's slowing down some planting in that area. So there's going to be some replant going on. The estimates are about 47% of the crop has been seeded in Brazil, but the normal pace is about 57. So we're starting to fall a little further behind. A lot of that is because of replant. The corn pace in Brazil and in Argentina also a little bit behind normal. So there's a reason to start putting some weather premium into the soybean market because of that late planted nature and the hot and dry forecast. So I think it's a combination of stronger exports, looking ahead to Thursday's supply and demand report and expecting that report could be friendly to soybeans from a demand standpoint with very strong crush numbers and improving demand, and then also weather in South America. So, I don't think it's something that we're going to sell the soybean market off until we really see a major change in that weather pattern. We could certainly see some profit taking after a couple of day rally here. That wouldn't be surprising, but dips in this market right now are meant to be looked at as buying opportunities.
All right, as we go into our first break here, you had mentioned you had just got a little news tidbit. Did you want to share that with everybody, what you just received?
Yeah, it looks like Wednesdays we normally have the weekly EIA report that talks about crude oil production and inventory levels, as well as ethanol demand. Natural gas report on Thursday. They are delayed this week. There will not be any of those reports until the following week. They are doing some sort of a system upgrade, and so they'll have 2 weeks of data next week. So I know everybody looks forward to that report on Wednesday morning, and we're not going to have that information this week.
Oh, we just love it when those government agencies revise their systems. It always works out so well. We just always look forward to that. Wow. Well, thanks for that heads up. And now we have that to think about for the next week. We'll pause right here and we'll come back and we'll talk about livestock on the other side of this break. Come on back. All right, we're back with you talking with Brian Hoops of Midwest Market Solutions. Brian, I want to bring up the livestock summary and just kind of recap what we did last week when it comes to the cash cattle trade. Basically, from what I understand, in the live cash cattle trade last week, it didn't seem like we accomplished a whole lot. Now, according to some reports, maybe the market was steady. In some cases, maybe 50 cents lower or so. Dress basis, I'm seeing the market just kind of on both sides of where it was the week before. How do you read the tea leaves here?
Yeah, in similar fashion, Marlon, disappointment with the futures and not seeing any cash trade really to speak of in the Southern Plains last week. Dress trade was strong, a little bit of weakness in the live trade in the north, and just a handful of trade in the Southern Plains at that steady money. The futures, I thought, were a little disappointed with it, sold off on Friday. We reached some technical objectives, filled a gap in the December cattle charts, and then turned lower on Friday. So now you look at what are we going to trade this week? Well, we're still looking for direction from that cash markets, and expect the slaughter pace to slow down a little bit this week as the box beef values have not kept up with the rally here in the futures or in the cash. They're trading lower on Friday. That puts packer margins at a negative $92 a head. So there's not a lot of incentive for them to increase their kills. We could drop that kill back from 632 last week, which is a decent number, maybe in the 615 to 620,000 range, as no doubt these show list numbers are probably going to be carried over and increased a little bit from last week. So I think right now we have to be kind of optimistic longer term for the cattle market, but very cautious in the near term here because of those negative packer margins.
Well, on the live cattle, we finished up last week with that December contract down by 80 cents as we headed into the weekend. So the close was 183.87. February, though, was down $1.20 at 185.22. That had the biggest loss of the futures on live cattle last Friday. On the feeders, they really took it on the chin. January was down 242. That was the biggest loss of all the contracts. It was at 239.75. So that will be their starting point today. And on lean hogs, well, they were kind of in the tank too. You had December down $1.52 at 71.75. February was 75 lower at 75.47. All of the deferred contracts were at least 70 cents lower on Friday. All right, Brian, thank you so much for all the information this morning. And we'll talk once again here real soon. That's Brian Hoops of Midwest Market Solutions. He is in Springfield, Missouri.